Good morning. Welcome to Business 360, where business, markets, and the economy come into full view. I'm Margaux Salcedo, and this is the Bilyonaryo News Channel. The peso opens at more than 62 pesos to the dollar this morning, an all-time low. The Bangko Sentral ng Pilipinas hikes the key rate to 5%. And signals say that inflation may stay elevated next year. BDO Capital's Ed Francisco joins us. And tycoon Lance Gokongwei is now chairman of PhilWeb, 2 months after investing 2 billion pesos in the gaming company. And so it happens. The local currency breaks past 62 pesos to the dollar this morning. It opened at 62 pesos and 5 centavos to the dollar, even weaker than yesterday's record low close of 61 pesos and 88 centavos. The Bangko Sentral ng Pilipinas had raised its inflation forecast for 2027 due to second-round effects and the risk of a super El Nino. Prospects of a U.S. Fed rate hike are also spooking the local currency market. At a Senate Finance hearing, the BSP governor said it is difficult to defend the peso at a specific level as the country imports more than it exports.
Yung tax silica, maaring makatulong sa exports yan, pati yung Luzon Economic Corridor, mga nakatutok na ba yan sa exports eh.
3 rate hikes in a row, and the BSP may not be done yet as it sharply raises its inflation forecast for 2027. Chia Sulit reports.
The Bangko Sentral ng Pilipinas has raised its key policy rate by 25 basis points to 5%, its third consecutive rate hike this year. Despite the recent easing in headline inflation, the BSP warns of further price pressures ahead, with core inflation still above the tolerance range. The central bank is also keeping a close watch on volatile oil prices. BSP Governor Eli Remolona Jr. says the rate hike is intended to keep inflation expectations anchored and prevent price pressures from spreading further.
Today's rate hike was a preemptive move because of risks that we anticipate, including the risk of an El Nino event on food prices and the risk of further minimum wage increases.
The BSP lowered its 2026 inflation forecast to 6.1% from 6.4%, following softer than expected inflation in June and July and declining oil prices. Still, inflation is expected to peak in the fourth quarter as El Nino pushes up rice prices. Inflation may return to the BSP's 2 to 4% tolerance range by the fourth quarter of 2027. But the 2027 forecast was raised to 5.4% from 4.5%, reflecting the expected effects of a severe El Nino and higher minimum wages. Remolona says the government still has fiscal space to support the economy.
We consider that very carefully, but not to raise the policy rate in our calculations wouldn't have added significantly to growth. We still have policy space. We have fiscal policy space, and I think the national government is taking advantage of that.
On BNC's Follow the Money, Colliers Philippines research head Joey Bondoc warns the higher policy rate could further weaken housing demand. He says mortgage rates were already at around 7.7 to 7.8% even before the latest BSP hike. Bondoc says existing loans may eventually be repriced higher, while more expensive financing could discourage new home buyers.
The developers' hands are tied at this point because, as you know, the cost of construction materials have been increasing. You have the Israel conflict, so that has also raised the cost of doing business, and that has resulted in increase in construction material prices.
Meanwhile, PCCI Vice President for Trade Brian Ang says another rate hike before year-end is realistic as inflation remains high and tensions in the Middle East continue. Ang does not expect the peso to appreciate significantly from the BSP's move, saying the rate hike has already been priced in by financial markets. For Business 360, Che Sulit, Bilyonaryo News Channel.
A regional research group cuts its growth outlook for the Philippines. The ASEAN Plus 3 Macroeconomic Research Office, or AMRO, now sees the economy growing just 3.4% this year, slightly below government target. AMRO blames weaker consumer spending, higher inflation, and slow investment. But it expects a rebound to 4.8% in 2027 if public construction picks up.
Overall sentiment has been weak because of this flood control related scandal. They have some negative spillover to private investment and also other industries. That's why we expect that this year consumption will be a bit moderated, softened, and then it will be recovered next year.
AMRO has a more optimistic inflation outlook at 5.4% this year before easing to 3.8% in 2027.
There are huge uncertainty on the development of Middle East conflict, so we will leave it as the upside risk. Also, we acknowledge that there's a potential risk on the El Nino, super El Nino, or this minimum wage hike, which we couldn't fully incorporate into our forecast.
In this kind of environment of probably negative output gap, it would not necessarily have a very strong rationale to have fast wage growth.
Fuel prices are projected to fall next week. Diesel prices may drop by up to 4 pesos a liter and gasoline 75 centavos. This is based on 4-day data from the Means of Platts Singapore. Global prices have been falling as the United States shifts its pressure campaign against Iran, from military strikes to economic sanctions. The government spent far more than it earned in July, pushing the budget deficit to more than 5 times higher than last year. The Bureau of the Treasury says the shortfall hit 106 billion pesos from just 19 billion in the same month last year. Spending grew 20%, revenues grew only 2%. The Treasury said higher spending was driven by social assistance, military modernization, and railway projects. For the first 7 months, the deficit reached 893.1 billion pesos, up 14% from a year earlier. We're taking a quick break. Coming up, we discuss these latest economic developments with BDO Capital President Ed Francisco. This is Business 360. Welcome back to Business 360. I'm Margaux Salcedo. Apart from delivering a rate hike, the Bangko Sentral ng Pilipinas also increased its inflation forecast for 2027, signaling a more challenging outlook ahead. We discussed this with BDO Capital Investment President Ed Francisco. Good morning, Mr. Ed Francisco.
Good morning, Margaux.
The BSP delivered its third straight hike and taken the policy rate to 5%. If you would recall, last April, it raised it by 25%, June 25%, and just yesterday, another 25%. Do you agree with this? Some were saying that it could have been as high as 50 yesterday.
Yes, so it was expected anyway. Of course, we respect our monetary officials. They were trying to avoid increasing if possible, but you also wanted to do it so that they wanted to tame inflation. But as you announced, the inflation forecast, in fact, is still high next year, right? They're increasing it higher. So that means also that possibly there might be more rate hikes, although we were expecting 1 or 2 more for the rest of the year.
Although the central bank governor said that they were hoping that they would not need to raise again come October, and that this one was a preemptive increase. Do you agree with that?
Yes, I mean, from a personal perspective, I do hope we don't have to increase anymore. But you're right, it was preemptive. It's sad nga lang that the peso market today, right, it reached 62 because that preemptive move was supposed to defend also the peso, and yet we're breached 62. But hopefully it will normalize in the next, the next few days. But we support the BSP.
With respect to inflation, in fact, the BSP, it decreased from 6.4% to 6.1 for 2026. And if you heard the news earlier, AMRO was actually even predicting it to go as low as 5.4%. Do you agree with these forecasts?
Uh, we have a slightly different forecast, but yes, we still see inflation to remain high, largely out of our control, Margot, because it's really of the oil and and what's happened in Iran. So it has so many effects on us, right? There are second tier effects. So we're trying to do our best, and that's why we're still seeing a muted consumer growth and still weak I guess, government investments. That's what is really causing the GDP to remain low.
Oh, well, with respect to the GDP remaining low, the BSP in fact pointed out the government spending. And in fact, we also had a few economists in the past few days saying that the way forward is more for the implementing agencies and a whole of government approach to increase government spending. The BSP governor in the press conference that the BSP had yesterday said that their policy rates actually was not the biggest factor in bringing GDP down. Do you agree with this?
You're right, Margot. It's at this point, it's not the interest rates. I guess the interest rates, especially because it's predictable, is something that the businesses can manage. What's really I guess what's really causing this slowdown is really the perception. It's still this floodgate issue. It's really I guess because there's so much focus on the politics, right? Rather than on the business side, foreign investors are generally keeping out of the market. Of course, there are lots of investors coming in for the energy sector. We're seeing a lot of that. We're benefiting for a lot of that. But in terms of the PS in the capital markets, despite what President Juan Monzon and the rest of the board are trying to do, it's been very weak. And so again, because it's been politics, if we focus more on what the government is doing, you're right. Ease of doing business, how they can get their permits, etc., etc. I think that will help and augur well for the government and for the private sector in general.
When you mentioned the consumer spending, AMRO actually earlier, also in the news today, had stated that consumer spending was one of the factors with respect to their forecasts. It's interesting because usually when they talk about GDP forecasts, they put a reason for it usually is on government investments. But AMRO was specific to consumer spending. How does this factor in?
Okay. No, because in the past, right, in I guess in the previous administrations, right, because we had more fiscal space, although Governor Ellie mentioned we still have some fiscal space, we were able to grow investment or government expenditures up from 6 to 7%, right, to catch up on infrastructure. We fully supported that. Admittedly, now because of our tight budgets, we've reduced that. And of course, because of what's happening with Floodgate, they've been very careful in spending. That's a big component of the GDP. And then in addition, in the past, the reason our growth was high, the GDP growth was high, because we were always very reliant on consumer demand, because we were a consumer demand country, very high growth. Now, admittedly, when I talk to many of my clients, from the big multinationals to the SMEs, there's this hesitance, and they're really seeing it in retail. There's really a slowdown. So because of that slowdown, that's hitting us. And then even government spending, what are they focusing on? With the limited budget, they're focusing on health and education, which is correct anyway. But there's little now expenditure on the roads, the bridges, the infrastructure we need. The private sector is doing as much as they can, but with the weak consumer and then the weak government spending, that's really resulting in the weak overall GDP.
They're in a bit of a quandary, aren't they? Because the BSP also yesterday mentioned that another factor is the minimum wage increase. Although, of course, now that's temporarily on hold, but they expect it to be factored in. But then at the same time, even if people have, say, more to spend because of the minimum wage increase, it'll still be difficult because of the high inflation. How do we reconcile that?
Yeah, it's really a catch-22, no? And maybe that's why I'm also on the private sector. Because on one hand, yeah, you want to give people more money so that they can spend. On the other hand, what I'm hearing from the SMEs all the way to the large corps, this wage increase also is now meaning that they would have less profits because they cannot even pass on the full effects of the oil increases nga. Their costs of goods have really increased much. But if they pass that on, hindi na talaga kaya ng consumer. And that's why when I talk to the large FMCG companies, people are shifting down na nga. We're doing a lot of this sachet marketing, and yet some of them, aside from buying smaller tingy items, are even shifting down to the cheaper brands. So that's the effect already on the economy. So unless the consumer sentiment, the general environment improves para mas gumastos ang tao because people are also being more careful, they're saving, trying to save for all this I guess the war and the uncertainty, it's having this double triple whammy on the economy.
Well, yesterday also at the BSP press conference, Governor Ellie said that perhaps we will start seeing the effects and the inflation getting back to target range within 2 years, starting last April when they started their first adjustments. When do you see the tightening cycle ending?
Yeah. No, in fact, I applaud what they did by increasing the inflation rate a little because I think we were also in line, but we were hoping that inflation will go down faster. We think, at least the BDO House view, that oil will stabilize maybe between $70 to $75 per barrel, and then we can manage off of that. And then inflation nga is going down, which is good for us, no? And then as inflation goes down, that will also now allow the BSP and Monetary Board to hopefully, stop already or even bring down policy rates, which would be good for the businesses. Because yes, we don't want to hurt the businesses, but on the other hand, we respect what the BSP is doing because they need to also manage inflation, and that will come down. So it will come down. The question is how fast before it comes down and normalizes.
And then from an investor standpoint, where does this leave Philippine assets? Are we at a point where the rate outlook is becoming more of a headwind for equities, property, and credit, or is much of that already reflected in valuations?
In terms of valuation, Margaux, it's fully reflected. In fact, we're so cheap, except you're right, it's really sentiment. We're so cheap, we're at the lowest valuation already, and yet investors are not coming in, right? The foreign side. But if you think about it, that's why I think you just announced earlier, even MVP Group is buying back shares of Meralco. A lot of the other groups are buying back their shares because they really feel it's so cheap. Even the Ayala Group has done that with Ali. SM has done that. It's showing that they really believe it's so cheap. In fact, to the point that many companies are considering delisting because they feel that the market is not appropriately pricing them anymore, which of course we don't want to happen. But on the other hand, for the large owners, it's unfair that they're valued so cheaply. So we think that it's really cheap. It's a good time to come in, except the question is we don't know when the recovery will come up. Of course, the elections have a big role because if magandang results and everything, and then everybody loves the new president next year, the market could double suddenly in a few weeks' time.
Well, so that's very optimistic. And lastly, of course, we also have to factor in the Fed. Are you also looking at tracking what's happening there?
Yeah, so we're closely what's happening there. The only problem is when I watching the headlines also earlier with what's happening even now with with even with Canada, one of their close trade partners. It seems that their bond rates are being affected, and the strength of the U.S. dollar. Of course, we're very linked to the U.S. dollar, and the U.S. we're close friends with them and allies. But we hope that also gets resolved, because the volatility there will also hurt us. So we hope that will be resolved, because if the borrowing rates of the U.S. increase, imagine we're linked. So when the U.S. Markets sneeze, we get pneumonia. So the more stability there is in the global markets, especially the large industrialized companies, the better also for us.
All right, so thank you so much, Mr. Ed Francisco.
Thank you, Margaux.
We're taking a quick break. Up next, tycoon Lance Gokongwei is now chairman of PhilWeb, 2 months after investing 2 billion pesos in the gaming company. This is Business 360. Welcome back to Business 360. I'm Margaux Salcedo. After 2 months of investing 2 billion pesos in PhilWeb, tycoon Lance Gokongwei is taking over as chairman, while Liberty Flour Mills is now ready to let go of its 68-year-old business. We have these stories and more.
No longer their bread and butter, Liberty Flour Mills is ready to let go of its business after nearly 7 decades. The company has moved from considering a sale to formally putting its flour milling business on the block, while also unloading a string of properties. Stockholders will vote on the sale on September 23. It follows a review that began in January. Liberty looked at selling, splitting off the business, taking on a partner, or simply keeping it. It chose to sell, but hasn't said for how much. Liberty is also selling properties in Batangas, Cavite, Taguig, and Mandaluyong, including a unit at PSE Tower in BGC. On the books, its investment properties are worth 705 million pesos, appraised 5.7 billion, more than 8 times that. That gap has paid off before. Last December, Liberty sold land in Rizal for 367 million pesos. On its books, that land was worth 1.8 million. The gain, more than 350 million. One line in the filing stands out. The board authorized its top 2 executives, John Carlos Uy and William Ang, to sign a non-disclosure agreement with a company it names only as Wilmar. It remains unclear whether that means Wilmar International, the Singapore-listed agribusiness giant with more than 1,000 plants worldwide. Lance Gokongwei is taking the chair at PhilWeb. The PhilWeb director was appointed chairman of the board yesterday. He replaces Crisanto Roy Alcid, who gave up both of his top posts, chairman and chief executive officer. Alcid stays on as a director. Gokongwei serves out the rest of the current term, while the CEO post stays empty. Manny Pangilinan is buying more Meralco shares as the stock keeps falling. The Meralco chairman and CEO spent 4.75 million pesos on 10,000 shares on Monday at prices between 467 and 487 pesos. That brings his direct holdings to 113,000 shares, with 5,000 more held indirectly, a total of 118,000. Meralco closed at 470 pesos yesterday, its lowest in about 7 months. At that price, his stake is worth about 55.5 million pesos. The stock has lost about 20% in the past month and is now around 31% below its 52-week high of 679 pesos and 50 centavos.
On our stock market action, the Philippine Stock Exchange Index is trading sideways at the 6,000 level as investors digest the latest BSP signals and the peso depreciation. Active stocks are trading mixed, with ICTSI leading the gainers. It was a more bullish session on Wall Street, with the tech-heavy Nasdaq jumping by more than 1.5%. Nvidia's strong revenue forecast fueled sentiment. And that's Business 360. I'm Margaux Salcedo. Thank you for joining us. Keep it here on BNC, the Bilyonaryo News Channel.